So how can Excel Your Finances help you? Basically I look at it as a tool. And if you don't have the right tool, like you saw in that last picture, things can get really messy. And a HELOC can really make things complicated because with your personal finances, because if you're just looking at the balance in your HELOC, you might not be seeing the whole picture. And if you're not being held to a standard mortgage payment and that you have an interest only period and you're not paying attention to what you're doing, you might actually be going the wrong direction in terms of paying off your loan. So I really think Excel Your Finances can play a big role in helping you. And the sample data we're going to look at, I just took a little snippet of it here. You can see the PNC HELOC. This is just sample data. This isn't actually my data. It's just data that I made up a few years back. But I changed some of the names for this video. So instead of saying mortgage, it says HELOC. And what I did is any money that was going to savings, I took it from savings and put it against the HELOC, because the whole idea is you wouldn't just put money into a savings account. You would take that money and you'd put it against your HELOC and try to pay it down as quickly as possible. So I made some of those modifications with the sample data, and this is what it looks like after I made those changes. And you can see the balance going down. Again, this data was pulled together just with somebody who wasn't a Replace Your Mortgage customer and was just paying down a mortgage and also putting money aside into a savings. So you can see the effect here just looking at this and how that HELOC has gone down. One of the interesting things at the top of the page, you can see the total income for each year and the total giving and expenses. So let's look at 2013, and you can see the income was $61,000, the giving and expenses was $46,700, and the total was almost $15,000. Now, they cleared $15,000, but you can see how much the HELOC went down was just about $15,000. So what's going on here is as you pay money against your home equity line of credit, you still have access to that money. So Excel Your Finances shows it as, hey, you have netted almost $15,000 this year, but the reality is, as a Replace Your Mortgage, all of that went to paying down your loan. So let's go into the actual spreadsheet that I'm talking about here. There's videos that will show you in detail how to set up your Excel Your Finances spreadsheet and how to use it. And I'm not going to focus on that in this video. I'm going to just focus on the sample data that I have and kind of how Excel Your Finances helps you track what's actually happening as you use it. So I tried to transfer some of the cash that was sitting in this bank account against the HELOC. What you're looking at here is in Excel Your Finances on the summary page, you simultaneously can see your bank account and credit card balances, and then down below you can see where the income came from, where you spent the money. So there's kind of two separate sections on one page here, your financial accounts and then your different categories of where that money came from and where it went. So looking at this, the financial accounts, this is your balance as of these dates. So the balance as of the end of 2011 was 178, and as of this data goes through April of 2016 was around 99,000. You can click on this button up here and it will switch it from showing all the years to showing 1 year. So you can see here in 2016 a balance going from 104 down to 99,000 in 4 months there. And you're like, why is it showing balances in June if you only had data through April? Well, the spreadsheet is recognizing that today is June 11th, and so it's saying, hey, your balance as of June 11th is this balance. Since I haven't entered any data since April, that's why the balances are the same there. Let's go back to looking at the years. So whatever year you put in over here, it's going to start with that year. So if I put 2013, it starts with that year, and it'll show you 12 years at a time. If I put in 2011, which is when this data began, you can see how that goes. So here's my bank accounts, my HELOC. The HELOC goes in as a negative, that's money I owe. And here's 2 credit cards, and then a health savings account. Now you say, why are you saving in a health savings account if you're trying to pay down a home equity line of credit? Well, you might be singular focused that you want to pay down your line of credit, and I agree with that. If you have a health savings account at work, that is just a very smart practice to put as much money as you can into your health savings account. There's a government limit to it. Anytime the government's limiting money that you can put into something like that, there's usually a reason, and it's because it's literally the only way you can get triple tax savings. You can put money in tax-free, it can grow tax-free, and you can pull it out tax-free. The only nuance to that is it has to be for medical purposes. All right, enough of that sidebar, but that's why that's still on there. All right, so as I've entered data into this spreadsheet, here's the income that was earned from 2 different employers for this family. They had some other income, some tax refunds. They gave some money to their church and other donations. So what we ended up doing here to make this, to show you how this is going to work, is when you first put in the HELOC, you put it in as a beginning balance, and that's down here at the bottom. So that's why there's such a large expense in 2011. You're like, well, you truly did buy a house, and it cost that much money, and that was an expense that year. I'm going to come up into these fixed expenses. As you record the payments, so you can see in 2012 here, there was $18,300 worth of payments made to the HELOC. You say, well, why did the principal only go down $13,000? So every time you record a payment, it's offset by the interest expense. So the difference between these two numbers, if I highlight them both, you can see there was $5,200 worth of interest that year. The next year, you can see the interest is going down. So as the principal in the loan is going down, the interest that you're paying in is going down. And you can see that there was a payments of $112,000 made, and that the principal came down almost $91,000. And this was not full years. It was like half a year of 2011 and 4 months of 2016. So it's like 1, 2, 3, 4, probably about 5 years. That just using this sample data of this person's income and how they spent their money was able to reduce their home equity line of credit by almost $91,000. So let's talk a little bit about setting a goal and trying to pay off your HELOC as fast as possible. So what we're going to do is just show you how you would do this moving forward. So if your balance is $99,000 and you want to try to pay that off in 3 years, you can just do a little bit of math here. We're going to take $99,000 and we're going to divide that by 3. And it says, okay, we would need to pay $33,000 a year to pay that down. Now looking at what has occurred in the past, that might be a little too aggressive. So if we just take $99,000 and divide it by 4 years, that's a little more in line. And you see about $25,000 there. And I guess one last option would be to take it over 3.5 years. So you kind of have those three numbers in your mind. $25,000 was 4 years, and 3.5 years was $28,000. So how do you apply this in Excel Your Finances? So if we go, we're going to take a look at a budget here. In the budget tab, what I do to make it easy is I pull in the past 3 years of activity so that when you're looking at a category, you can see what you typically spend in past years, and then set a goal for the current year that you want to try to achieve. So I did that using the sample data. I put goals in here that were reasonable based on past spending. And I kept the income. I increased the income a little bit, but I kept it fairly the same. And the only thing I didn't fill in is the payments to the HELOC and how much the principal would go down. And the reason I did that is because I wanted to see how much money was going to be left to pay to the HELOC. So I can literally come in here after doing all my budgeting and say, I want to pay down $29,534. So if you remember the three calculations I did there, that was around the 3.5 year mark to pay that off. So the way the spreadsheet works, you can see that now shows that you have 0% net. And if you went and looked at what you pay in interest over that year, you would be able to calculate that exactly. And I actually have a loan calculator in the spreadsheet. I'm not going to do that right now, but I'm going to say it's probably $3,500 is probably a close guess, depending on what your interest rate is. And we're going to put that in as a minus $26,000 reduction to principal. So that gets us right in the 3.5 to 4 year range. So I'm going to make that a negative up here. And so that gets us $26,000 to principal, and that was right in the 3.5 to 4 year range to get this completely paid off. And the way it appears here, because remember, you still have access to those funds, the $26,000 becomes what's the net remaining, and it's basically a 39% of your income is put towards the HELOC, and that's how that ends up looking. So then you would do that at the beginning of the year or at any point, and as your year is progressing, you can see how you're doing in each category. So basically it's saying, hey, you wanted to pay $26,000 down in principal over 102 days. This is through April 11th. You should have paid $7,200. You can see that we've paid more than that. So we're actually ahead of where we needed to be. And you can see the corresponding to the HELOC payment, and the difference is the interest again between these two. And you can come down through and look at the other categories. The green means you're doing good, so you're under budget. The red means you're over budget, and the yellow means you're close. And you can come down through and see how you're doing. And it also takes a look at your income. So we estimated more income from employer 1, but we made up with it from more income from employer 2, you can see here. So that's just a quick look at Excel Your Finances and how the budget works. You can see how powerful this is. Once you get that goal, you establish that goal, you put it right in here into the budget, and then as the year progresses, all you're doing is taking 10 minutes a week, dropping your actual transactions into the import tab, posting them. They all accumulate here in the transactions tab, and then you can come to the budget and just look and see exactly how you're doing, and it's going to be helpful to motivate you to make sure that you're staying on target of achieving your goal of paying off your HELOC completely.